Alrighty, welcome back to Weenie Trades, and happy Mother's Day. Shout out to all the moms out there. So in this video, I'm going to be breaking down the SPY, the QQQ, the XLF, the Dow Jones, the IWM, the VIX, and potential trade setups for the upcoming week. So let's get right into it. SPY. SPY had a nice, good horizontal pattern that is starting to actually break bullish. So this was a really choppy week, choppy month. The large caps have just, trading has not been as conducive this year as it has been last year, but that's okay. There's still opportunities to make money. It's just time to just slow down as we gear up for the summer. There's going to be less trading volume. Things are going to heart rate monitor a little bit more. And so just got to be a little bit more selective in choosing our stocks. And with the SPY breaking out of this sideways range, that's actually a breakout. It's on decent volume. It's not on low volume. It's not on a lot of volume. So I'm not expecting SPY to go straight up, but maybe SPY just kind of chugs along and slowly curls up based off this nice, good bull flag pattern. Because if we wanted to sell off, why didn't we sell off? If we didn't sell off, that means we're likely going to go higher. So likely higher on the SPY. No signs of a market pullback or correction just yet. I do think that there eventually will be a bigger, 9 to 10% correction before the end of the year. Maybe next year, but a decent sized correction is due, and it would be healthy for the markets. But watch for SPY to potentially break out and back test this 421, maybe as low as 420. Maybe it fills the gap at 419. But other than that, pretty bullish on the SPY. If we check out the Qs, the QQQ, I like the Qs long term. But short term, 1 to 3 years, I think the Qs might have a little bit more of a pullback, for the rest of the year. I don't know if the Qs, I bet the Qs probably make new all-time highs before the end of the year, but I'm expecting the Qs to not be a leader in terms of performance in the market. I got a little bit overcooked, and now it's starting to show relative weakness. And I have to assume that relative weakness stays until it doesn't. So amazing reports by all the FANG names, and and the Qs is not just bursting higher. That usually means okay, we might just be consolidating a little bit for the Qs, consolidating, choppy, sideways. If I had to pick one to go long on, I would go long on Google. But other than that, when you have such amazing reports and you sell off, it usually can mean a little bit of profit taking for a few months. So that's something to think about in terms of the QQQ. Let's check out the financials, the XLF. The financials are what's pushing up the SPY. So financials, big component of the SPY. We talked about these flag breaks. We pulled up higher low, double top, higher low, breakout. So financials are breaking out. A little bit overcooked right up here. So we might pull back to the former breakout area. Maybe XLF pulls back to like 36 or something. Probably would be a dip buy. Long term, I don't like financials as an investment. But, short term, maybe the next few months, next few years, I do think financials can perform decently well moving forward. So that's the financials. Look, let's check out the Dow Jones. Last week, I talked about the Dow Jones, and look at this binary event. We were squeezing, pinch. Are we going to break down, question mark, or are we going to break up? I've got two arrows. Looks like we selected the up arrow because we went above 340. And there's your 340 breakout on the Dow Jones, as we talked about last week. And now the Dow Jones is sitting at all-time highs, so Dow is relatively strong. I expect that to continue a little bit, but remember, we're a little bit overcooked. We can potentially pull back to 342.61, the previous all-time high, and that would just be completely normal and healthy, and it can continue its uptrend. So that's the Dow Jones. Let's check out the IWM, the small caps. The IWM probably has the most opportunity for upside, in my opinion. We've gone sideways for a bit. We're gearing up. In terms of fundamentals, price to earnings and other metrics used for fundamentals, a lot of the companies in the IWM will have more upside, in my opinion, than downside, at least in the short term. So IWM, maybe selling puts was the way to go. I was talking about that last week, maybe selling the 220 strike put. That was the way to go. It still looks like it might be the way to go. And maybe potentially even a call option if we break out and get some volume and actually start moving instead of just going sideways. That would be great. Otherwise, selling premium on the option chain is the way to go to collect all that theta as it goes sideways. That's if you're going to be selling premium. But if we get the breakout, I want to be long some call options, some vertical spreads, whatever it may be. So that's the IWM. And then lastly, let's talk about the VIX. VIX right here. VIX we started to really come down. I said we're probably going to get a little pop. We got the pop. We got the early sell-off in the week. But then the VIX just started to fade on over. And so that, there you go. We're still within this channel. I expect the VIX to continue on lower. Moving average, convergence, divergence seems like it wants to cross on over and create some more negative energy to the downside. So VIX, fear is dissipating, especially as we come into summer, we come into reopening. That's something to think about. And so let's get into the potential trade setups. I only got a few, but I'm keeping an eye on Roku for a short. I tried to short it Friday, but got wiggled out of some of it. It would be easier if I just did a bear call credit spread. So looking to short Roku underneath, 314, and then, looking to take some profits around the 310 area, the 304 area, and then lastly, a final take profit of about 300 on Roku to the downside. And stop loss, just probably be above, 322, 323. But bear call credit spreads, put debit spreads, long puts are pretty volatile on Roku. And if we do get a choppy week and there's a push-pull, then selling that premium would be a better way to go about profiting off of that Roku to the downside. So that's Roku. Watching actually Nokia, we got the nice good pop on decent earnings. It looks like the market liked the earnings. We went sideways for 1, 2, 3, 4, 5, 6 days, and now we're moving higher. Well, that means, hey, we've had the opportunity to sell off. We didn't sell off, so we're ready to go higher. So I'm looking at Nokia for potential strength and seeing if Nokia could just maybe get as high as 550. That would be a nice good take profit spot. About 5 to 10% of margin of profit in there, and then maybe even maybe if we can get above 520. We test that 550. Maybe if we get a real good squeeze, we could see Nokia at 667, and that could offer 26% ROI on a good earnings report, and that would be pretty interesting to see if we could get that on Nokia. Again, though, the reason I like it is because we had so many opportunities to sell off, and we chose not to. That usually means, okay, we're good to go for the other side. And the Dow is really strong, so I'm going to be watching Boeing and Disney. Boeing, this is a bullish wedge pattern. We're making lower lows, but not a lot of follow through. Now we're starting to break out. And, we kind of got a MACD trying to cross, but, still watching for Boeing to potentially break out. Maybe it doesn't do it earlier in the week, but maybe it does it later in the week. So watching Boeing for a long trade. And along with that, Disney will see if we get an earnings run up, a pre-earnings run up. I would like to do most of my trading, though, on Disney after earnings on, I believe, Thursday. The option chain, Thursday, because we expire on the 14th on Friday. So Disney, looking for Disney more upside. This should be a good, wedge pattern similar to Boeing. Should be the continued upside movement in Disney. If not, oh boy, that Disney could be in trouble. But we'll see if that ship sails or if it comes to fruition. And lastly, I'm actually just watching GameStop. GameStop's really starting to pinch into really tight equilibrium. So we have our low, high, higher low, lower high, higher low, lower high, higher low, still kind of a lower high, higher low, lower high. Now we're getting really, really pinched. Really, really pinched, and there's just no volume. GameStop is dead. It reminds me of back over here. But what happens? If there's a breakout on volume on GameStop, that's what I'm really looking out for. That means we could probably expand this range. And so looking for GameStop to break out or break down, I'm kind of leaning towards the breakdown because hype is starting to die out. So put options might be really good in this scenario if we get a nice, good breakdown with good volume. And I really feel that Friday's candle, this doji candle, should be the decisive move. So above 167 and we can pop. So I'm going to set an alert to the upside. And then on the downside, I'll give it, 157. And I can add maybe underneath 155 to that short. But, long if it breaks upside, short if it breaks downside, because we've been pinched for so long. And just remember that Dow chart, DIA. And that's what I'm kind of going to be looking for on GameStop. Are we going to break out or break down? So hopefully you enjoyed your Mother's Day. If you have a mom or don't, or if you're not good in touch with your mom, that's okay. But amazing day. Quiet market gearing up for the summer. I reviewed the large cap ETFs, the ETFs and potential stocks to trade. Thanks for tuning in. See ya.